US dollar dominates global trade because it has become the world's primary reserve currency, meaning it is widely held by governments, central banks, and financial institutions. After World War II, the United States emerged as the world's strongest economic and industrial power. This position allowed the dollar to take a central role in rebuilding the global financial system, laying the foundation for its long-term dominance in international trade and finance. A major turning point was the Bretton Woods Agreement in 1944, which established the US dollar as the anchor of the global monetary system. Under this system, many currencies were pegged to the dollar, and the dollar itself was linked to gold. Even after the gold standard ended in 1971, the dollar retained its dominant role because global trade and financial systems were already deeply dependent on it. The strength and size of the U.S. economy are key reasons for dollar dominance. The United States has one of the largest and most productive economies in the world, with strong institutions, advanced technology, and high levels of consumption. Many countries trade heavily with the U.S., so using the dollar makes international transactions simpler and more efficient. This widespread use reinforces trust and demand for the currency. Another important factor is the depth and stability of U.S. financial markets. The U.S. Treasury market is the largest and most liquid bond market in the world, allowing investors to buy and sell assets easily without major price disruptions. Central banks prefer holding dollars because U.S. government bonds are considered safe, reliable, and easily accessible, especially during times of global uncertainty. The dollar also dominates because many key global commodities such as oil, natural gas, gold, and agricultural products are priced and traded in U.S. dollars. This system, often referred to as the petrodollar system, means that countries must hold dollars to buy essential resources. As a result, global demand for the dollar remains high regardless of where the buyer or seller is located. Political stability and strong legal institutions in the United States further support confidence in the dollar. Investors trust that the U.S. government will honor its debts and protect property rights. The Federal Reserve's independence and credibility in managing inflation also contribute to global trust. Compared to currencies from less stable regions, the dollar is seen as a safe store of value. Network effects play a powerful role in sustaining dollar dominance. Because so many countries, banks, and businesses already use the dollar, it becomes easier and cheaper for others to use it as well. International loans, trade contracts, and financial systems are largely built around the dollar, making switching to another currency costly and complex. This self-reinforcing cycle keeps the dollar at the center of global trade. Although alternatives like the euro, Chinese yuan, and even digital currencies are gaining attention, no other currency yet matches the dollar's global trust, liquidity, and institutional support. While the dollar's dominance may gradually decline over time, it remains the backbone of international trade today. Its role reflects decades of economic strength, political influence, and financial stability that continue to shape the global